What's up, investors? It's Mike from MJF Invest. Today's video is going to be a continuation from my last video, which was about ARK Invest's Bad Ideas report. The first video, I talked about the first part of that document, which was physical bank branches. In this video, I'm going to be talking about brick and mortar retail. That is the second section of this report. If you don't know what the Bad Ideas report is, it's basically 5 industries that are primed for disruption. Go back and check out that first video if you haven't seen it yet. I'll add a link to the description. Hit that like button. An early thumbs up really helps me out with the YouTube algorithm. Consider subscribing to the channel for future content. I really like to build a positive audience, an interactive audience where we share ideas and just make money together. This section of the report, Brick and Mortar Retail, was written by Tasha Keeney. She's an ARK analyst. I want to give her credit. And then after I go over the report and what it says in the report, I'm going to tell you how I am going to use this information and some ideas I have, stocks I'm going to watch, sectors I'm going to be interested in. I'm just going to summarize the report the best I can, things I found interesting in the report. And the report states, in-store retail peaked in 2015. COVID has really accelerated the shift to e-commerce. E-commerce was an $820 billion industry in 2009, and ARK is projecting that number to grow to $2.7 trillion by 2025. In the same end, in-store sales for retail, they're estimating that it'll go from $4.6 trillion in 2019 to $3.9 trillion. That would put it at the lowest it's been since the late 90s. ARK estimates that $2 trillion of public enterprise, luxury goods, footwear and accessories, apparel, department stores, and apparel manufacturing are at risk. The report also highlights that have massive real estate assets. ARK also anticipates in the next 5 to 10 years that many companies who will not be able to cut those real estate assets, that they will have to go and file for bankruptcy. In the report, they also talk about last mile autonomous delivery drones. So right off the bat, Workhorse pops in my head. And, you know, that's really, they think is next big decline for brick and mortar retail. The reason for that is these drones can deliver packages for as little as 25 cents per trip. So the shift to e-commerce, you know, it's been here, it's been trending that way, and now it's accelerated. ARK doesn't see it ever going back. I don't ever see it going back. So e-commerce is the way to go. So I asked myself as an investor, how can I make money with this information? And it is noted again that I talked about last mile autonomous delivery drones. So Workhorse is a company that that sticks out to me. I know that's not ultimately popular amongst everyone. Some people view that as like a newbie stock. But let's not forget ARK Invest is involved as well. Do own a position in Workhorse. I have a very low average cost there. I was very fortunate to stumble across Workhorse when it was very cheap. Just to note that they did talk about last mile autonomous delivery drones and how cheap they make deliveries. You know, so Workhorse must be talked about. You know, there's no way around it. And I don't want to be boring and have to tell you go buy Amazon. Everybody knows Amazon. But you know, obviously the e-commerce space, the king is Amazon. Alibaba, JD.com, just to name a few. Those are the obvious ones. I won't. Shopify, ticker symbol SHOP. I won't go too much into them because, you know, they're very obvious. But they still are a buy, even at these prices, all 3 of them. What really fascinates me is Operation Starlight. These numbers are trending in a way, you know, and it's nice to see the growth and everything, but there's still a huge percentage of the world that doesn't have internet access. And Operation Starlight will bring internet access there. So, you know, I think that it's very relevant to this space, this e-commerce space, because more people with internet is more customers. As an investor, I don't only want to be limited to just American companies. I'm looking for other platforms and other opportunities as well. So companies like C Limited, ticker symbol SE, they're in Asia. they're a very interesting company to me. They're like an Amazon in Asia in a sense. Also, Mercado Libre, ticker symbol MELI. Very, very good, very fascinating company. They're also like an Amazon platform. They're in Latin America. And Jumia is another fascinating company that kind of follows this, Amazon type trend. Ask myself, what runs simultaneously with high e-commerce sales? So the companies have to, the goods have to get to the consumer. So companies like FedEx and UPS also will see a bump in revenue. And payment options, PayPal is one that jumps out to me immediately. And that's kind of why PayPal is one of my favorite long-term investments. Just because they they benefit from so much of this transformation. But there's two stocks that are in this sector, in the e-commerce sector, that I'm going to particularly keep an eye on, and that's Etsy, ticker symbol ETSY. They sell crafts, homemade crafts. It's custom stuff, artwork. Their user base, their sellers and buyers are growing at a very rapid rate. The reason that I haven't invested quite yet in them is because they're very high right now. They're at an all-time high. Even with good scenarios going, I don't know if I could justify the valuation that it's at right now. So I would be waiting for a little bit of a pullback with Etsy, but it is still an interesting company. It's pretty high up there on my watch list. That I'm really liking a lot at the moment. Becoming a wild bull here on Chewy, ticker symbol CHWY. It's a dog food brand. They sell dog food and pet services. ARC estimates that by 2030 that 60% of all retail sales will be through e-commerce. Isn't that I was so drawn to Chewy? Americans, we love our animals. We love our pets. That's for sure. I don't know how it is around the rest of the world, but in the United States, Americans love their dogs. So Chewy has really benefited quite a bit. And this may sound silly to some people because it's dog food and pet services, but this is an e-commerce play. Chewy is the largest online retailer of pet food and supplies. They had $4.85 billion in sales in 2019, and they're projecting $6.8 billion in 2020. That's 40% annual growth, up from 37% the year before. Chewy has a large product selection, and 68% of their sales are to customers with active auto ship programs. So they have a very high customer retention. Chewy is also making investments in new distribution centers to speed up the delivery to their customers. The pet food and supply market was $56.1 billion in 2019, is expected to grow over 5% annually for the next 5 years, according to the American Pet Production Association. But this kind of falls into the same category as Etsy. It's very overextended right now, in my opinion. The valuation for the company is hard to justify, even with favorable scenarios going forward. So if I could get a pullback, I'm going in on this company. I don't want to preach that too much. Just because a stock is overextended or overvalued doesn't mean you can't make money. I mean, look at Tesla. But I generally don't. I'm not necessarily a huge fan of buying stuff at its all-time high or while it's on a crazy run. So I'd be waiting for a little bit of a pullback, but I could see that being very big. I'm also looking for other, similar companies. Look at a company like Chewy right now. They were, sold from PetSmart. PetSmart's selling them, and now Chewy is doing big business on its own. I'm looking for other type of vendors to really, really excel. I could possibly be looking for some kind of call option if I could get a little bit of a dip. If I decide to take a position in Chewy, I'll let you know. But I'm becoming bullish on this company more and more I read. And I know it sounds silly because it's dog food, but I really like this company. They have a good business model. They just named a a service to set their, people with their auto ship program. They could set them up with vets. So they got some cool stuff going on. I just wanted to throw that out there. It's a little bit offbeat, but something to look into. And I'll also be looking for other vendors that could capitalize from this shift in e-commerce. Thanks for watching, guys. I hope you enjoyed the video. I hope you found some value in it. Let's talk stocks in the comment section. Hit that like button if you're still watching. And don't forget to subscribe and hit that bell notification. Thanks for watching.